In this video, we'll talk about money. Good Amazon seller knows his or her numbers. And in this session, we will talk about key financial metrics every Amazon seller should know in order to keep healthy profit margins. We'll have two great specialists from the industry who work with numbers and finances, especially for e-commerce and Amazon sellers, probably every day. And it will be Tyler and Nathan. And before I introduce our guests, I wanted to mention that this video is part of the Seller Fest Online Virtual Summit, which we are running together with 40 Amazon industry experts. And this session is sponsored by two great companies. The first one is Getida. It's a global leader of Amazon FBA reimbursements and auditing solutions. They help to get money back, which Amazon owes to every seller. And it fits very well to this session where we talk about money. Get the link below, get the audit for free, and check how much Amazon owes you. And the next company is VAA Philippines. They help with virtual assistant services for Amazon and Walmart. In general, e-commerce sellers. They help with different aspects in your business. If you need full-time or part-time or a few hours a day help from assistants from Philippines, you'll find the link below in the description. So check them out. And it's quite affordable. And I think I will bring our guests, Tyler and Nathan. Hello, guys.
Hey, how's it going?
Yeah, all good. Thank you. Nice to meet you. And we will introduce you very shortly, and then we will go with Nathan's presentation, then Tyler's, and then we will keep questions and answers at the end. So Nathan, please introduce shortly yourself. I know that some people know you from a few years ago for different things, so please go.
Yeah, so I've been in the e-commerce space since 2008. I started an e-commerce business out of my college dorm room, sold 25 million on Amazon using a lot of virtual assistants and freelancers to do it. And that led me to my next company that most people know me for, FreeUp, a marketplace for e-commerce freelancers. We scaled that. That company was acquired in 2019. And since then, I've just been building different businesses in the e-commerce space to help entrepreneurs, whether it's my SEO company, Outsource School that teaches you how to hire, or EcomBalance, our monthly bookkeeping service. So here to chat with Tyler, we've kind of got a setup going where I'll teach you more about the setup and what you need to know to be dangerous as a seller. And then Tyler will jump into a lot of the metrics and stuff like that. So it should be fun.
And I missed, did you say that now you work with EcomBalance?
EcomBalance is one of my companies.
Yeah. You mentioned FreeUp, and then now you are focusing on accounting and money. And Tyler, how do you help Amazon sellers?
Yeah, so great to be on the show here with you, Augustus and Nathan. So I was an eBay seller back in college 25 years ago, and kind of built a healthcare company, exited that company in 2017, and then kind of got back into e-commerce when we built Seller Accountant in 2018. So Seller Accountant does bookkeeping, fractional CFO for e-commerce brands. And I also have a podcast and then lead a mastermind and have a couple other investment interests, kind of like Nathan, trying to dabble here and there. And just like he said, I'm excited to be here. We gotta get our numbers in order, guys, if we want to make a living doing this. And let's get into it.
So now Nathan will start first with his presentation, and then with Tyler's. While Nathan is sharing his screen, I wanted to mention that if you have any questions during this session, please leave them in the chat, live chat, if you're watching live. If you're watching the replay, leave them in the comments section below, and we will ask Tyler or Nathan to answer them. And don't forget to subscribe.
All right.
Also wanted to mention that don't forget to subscribe to our YouTube channel, which recently hit 20,000 subscribers. All right, cool. So Nathan, I see you're ready. Let's go.
Awesome. So today we're here to talk about e-commerce bookkeeping, and I want to approach it from the side of a seller as an entrepreneur. I personally am not a bookkeeper. I'm not a CPA, even though I own two bookkeeping businesses. But I know what to know to be dangerous and how to set up a good monthly bookkeeping process if you are an entrepreneur or a seller. And I already kind of told you about my background, Amazon seller and all that. But one of the best decisions that I ever made was hiring a bookkeeper from day one of FreeUp. I had just gone through 7 years of my Amazon business where I was always behind on my books, tried doing it myself, tried dumping it on my CPA, all stuff that we're going to talk about. And when I started my second company, I said, no, we can't do that again. We're hiring a bookkeeper from day one, before we're profitable, before we prove the concept. And not only did it help us sell the business 4 years later and pass due diligence and have 4 years of immaculate books to earn a lot of trust with the buyers, more importantly, it helped us make good decisions every single month, which helped us scale the company. And that's really what bookkeeping is all about. Sure, it can help you sell your company, get funding, get investments. Most of you out there aren't going to do those things. Some of you will, but every single person can use monthly bookkeeping to make decisions each month. That's what's going to help you scale. That's what bookkeeping is all about. And that's what I'm going to talk about. So the first thing I just want to say is don't do bookkeeping yourself. And I'm sure Tyler agrees. It's a terrible use of your time as an entrepreneur, as a seller. There's so many more important things when it comes to your Amazon business than spending time inside QuickBooks. You should never buy a course on how to do bookkeeping. Even if you do that, 9 out of 10 times, it's going to be done wrong. And I'm sure Tyler, again, sees this all the time, where a seller comes to you, they've done their own bookkeeping for the past year, or whatever it is, and they just have to pay you or someone else to redo it all because it's not done correctly. But even if you were a CPA, even if you were a bookkeeper in another life, it's a bad use of your time. You are a seller now, you're an entrepreneur now, and you need to act like it. Most 7, 8-figure entrepreneurs are not doing their own bookkeeping. That's just not the way of the world. And even if you're small and your bookkeeping maybe is cheaper than me or Tyler, find a bookkeeper that's cheaper, that knows e-commerce. You're going to regret not doing that later. It's going to suck up your time. So that's kind of my opening pitch. Don't do bookkeeping yourself, and we will keep going. Next is using a CPA for bookkeeping. So I always like to split up bookkeeping into 3 parts: the bookkeeper, the CPA, and the CFO. And usually I like to keep people in their lanes, and there could be certain combinations of them, but you have to remember that CPAs are focused on taxes. So they're going to do their books in a way that is correct for taxes, but might not help you on a decision-making side. They might put all your expenses together, which again is right for taxes, not so helpful with decision-making. CPAs can be more expensive, and you also want checks and balances in your business. If your CPA and your bookkeeper are both the same person, no one's going to be there to point out, hey, your bookkeeper is not doing it correctly, or vice versa. And e-commerce bookkeeping can be complicated. So bookkeeper there for monthly books inside QuickBooks, getting you clean, accurate reports on time every single month. It should be repetitive. There shouldn't be delays. A lot of times when you run with CPAs, they have their own tax deadlines that can delay your books. You want it on time every single month. CPA focus on what any of you should be: S Corp, C Corp, tax strategies, filing taxes, and CFO is there to help you make business decisions from what the numbers are. So make sure you understand the difference between all 3 and you use them appropriately. So I mentioned I kind of went through this trajectory of doing books myself, realizing I was terrible at it, it was all done wrong, paying my CPA to fix it all. Then I hired college kids to do it all, and that was a complete disaster. Again, I had to pay my CPA to fix it all. Then I would just wait till the end of the year and dump it on my CPA, and I had no idea how I was doing until the end of the year. And then I hired a bookkeeper to do it every single quarter, but I realized that by the time I got that information, it was too late to make decisions. And finally, I said, okay, we're hiring a bookkeeper monthly, get us the reports every single month, and that's where we make decisions on. So I learned the hard way, kind of skip my learning curve, get bookkeeping every single month, look at the numbers every single month, which we'll talk about in a second. Using the right tools. So setup for your business is important. You want to use QuickBooks Online or Xero. Most bookkeepers are familiar with those. There's other software out there that's free. It's free for a reason, like Wave. You're probably going to outgrow it. You also want to be careful of the benches and the final loops of the world, just because you're using a software that only they use. If you ever want to switch bookkeepers, all your data is on someone else's software and no one else uses it. Not to mention, a lot of times CPAs aren't familiar with it as well. Use QuickBooks or Xero. Own your own QuickBooks or Xero account. You don't want to work with a bookkeeper that is the owner of your accounts. Not that Tyler or I would disappear on you. We won't. But I've heard horror stories. I've had clients that come to me, their bookkeeper, their CPA disappears. They were the owner of the books and you're out of luck. So make sure you own your own data and you're the owner of those accounts. You also need the connecting tools, Link My Books or Connect My Books. A2X is another one, something to connect from the marketplaces to Amazon or marketplaces to QuickBooks Online, and pull in the correct data, refunds, returns, stuff like that. If you work with a bookkeeper that just connects directly from QuickBooks to Amazon, I would be very skeptical. Very hard to do that, as Tyler knows. And the last thing is business bank accounts, business credit cards. Make sure that you're using accounts that allow view-only access. Hopefully, you know not to intermingle personal and business, but you should be using accounts that allow view-only access for your bookkeeper, or you're going to find yourself sending statements every single month. Next is cash basis instead of accrual. I know there's a lot of brokers out there that say focus on accrual, and that can be correct, but make sure you talk to your CPA. They're the ones that should be advising you. There will be certain tax benefits of going cash or accrual. What we do is do sales and COGS and accrual, and whether you need full accrual is a whole nother conversation. So have that conversation with your CPA. Cash just means when something hits your account, card, bank account, that's when it goes into the books. Accrual is when you actually make the sale or sell the product, even if you bought the inventory up front. So something to keep in mind to have a conversation. Here's a quick way to just know if your bookkeeper understands e-commerce. If they're taking the money that's deposited into your bank account and that's the top line of your income statement, that's incorrect. It's a top line sales on Amazon or Walmart or whatever it is, minus all the fees and stuff in there, and then the money deposited into your bank account. So you're going to file your books wrong or file your taxes wrong if you're using the money deposited in your bank account as the top line. Next is segmenting your books. Have a conversation with your bookkeeper up front. If you're selling on Amazon, UK, US, Japan, make sure it's segmented in your book. Same with Walmart, Shopify. Just like if you were running an agency selling PPC and SEO, you would want that broken down. Next, a lot of sellers only care about their P&L, their income statement. Make sure you spend time going through your balance sheet and your cash flow statement as well. I have a sample report of chart of accounts we really like. A lot of our CPAs that we work with really like. We think it's a good e-commerce bookkeeping report. So go to EcomBalance.com/report and you can check that out. Number 10, just letting your CPA and bookkeeper communicate. Add them to an email chain, add them to the client portal. They should be on the same page at all times. Make sure they're connected if they're not already. And lastly, and the most important, is meeting monthly to review your books. So we have this monthly finance meeting that my partner Connor and I have been running every single month for all of our companies for the past 7+ years. We go through this month compared to last month. We go through this month compared to the same month last year, and we look for trends. And this is the meeting that we make decisions on. We don't make it based on gut or instinct or looking at our bank account. We do it based on what the numbers are actually telling us in this meeting. And you should set up a monthly process where you're getting the reports by the 10th, by the 15th each month, and then having a meeting on your calendar to go through these books that you do not miss for any reason. Your business partner attends, any other high leaders in your company attend, and that is the most important meeting of the month. So that's my presentation. I'll pass it over to Tyler, and I'll stick around for the Q&A. If you're interested in using EcomBalance, we give you a month free. And yeah, thanks so much for having me.
Yeah, thank you. I think we'll have a link below in the description. And thank you to Nathan and Tyler. Let's continue the conversation. So I will bring your slides. It's there.
Okay. Hey, great job, Nathan. So I think every word that Nathan just said is correct. If we don't have a handle on our numbers, if we don't have financials that are believable, I don't know if you guys are like me, but I'm an optimist. I'm an entrepreneur. I love building things. And if my numbers don't tell me bad news in a way that I cannot possibly ignore, I'm going to tend to make really bad choices. And so I need my accounting to tell me the truth, even if it's bloody, even if it's inconvenient. And so make sure that your accounting is good. What I'm going to do with this second half of our session is I want to walk you through some of the implications. Okay, great. We've got good bookkeeping. Our bookkeeping is solid. We're hiring Nate's team, or we're hiring Tyler's team, or we're doing it ourselves. We're just doing it correctly. Now, how do you use that data to make better choices? Nathan mentioned a couple of times the idea of making these reports useful. How do you use them? And so that's what this next section is going to be about. Again, you guys have already heard about me. And I'm going to walk you through 3 concrete KPIs that I think are crucial. They're complete baloney if you don't have good accounting, but once your accounting is good, I'm going to teach you how to use these KPIs to manage your business. If we have a minute, I'll give you a bonus primer on my VIP session. Some of you guys may have already seen this VIP session. If you haven't, highly encourage you to make the choice to pick that additional content up. But I'm going to go into depth on 2 concrete case studies from our clients on how to do what Nathan just described. How do you read a balance sheet? How do you compare it to your profit and loss statement? And how do you apply this holy grail KPI called return on working capital? That's the next session. But today, let's dive into my 3 pet KPIs: PAG, return on inventory investment, and CAL. So first of all, just to give you a visual picture of what Nathan just articulated so clearly, bad accounting is this. This is the one he talked about, where the Amazon deposit comes in, it gets booked to your income statement as the revenue, you book your purchases, and that's it. This does not give you and me enough information to make good business decisions as operators. Okay, there's one step better. Well, hey guys, at least we're splitting out the Amazon fees now, and we realize, oh my goodness, we didn't do $500,000 in revenue, we did a full $1 million in revenue. That's helpful. But I would still argue that there's one step better than this, and it's called an investor grade profit and loss presentation. I am a big proponent of understanding my advertising, my marketing expenses that are directly attributable to my sales channels. I like those up in the gross profit area, and I like to rephrase gross profit as being true gross profit or post-advertising gross profit. I call it PAG. You can call it whatever you want to call it. I just want to make sure that gross profit equals a true picture of how profitable my business is. So let me show you. So this is KPI 1, PAG, profit after ads. Let's take a look at a couple of happy situations. What you'll notice here is that the true contribution margin is 25% with both of these businesses. But if you look carefully, they're not identical. And my point here is to say that there's more than one way to successfully reach a strong profit margin on a product or on your portfolio. And you can see the difference between these two is that one of them has slightly better cost of goods sold, but and so they're able to spend more on advertising. The second one has slightly worse cost of goods sold, and they have to rein in that advertising budget. At the end of the day, as long as your margins are strong, you may be in a position to be very happy with your portfolio. In this case, by the way, this 25% number, the question you guys are going to ask Nate and I in a minute is, what's the right profit margin? If you're getting 25 points after ads, that's a really strong product. But what if it's not so strong, right? This is kind of more of an average. By the way, with the new placement fees coming out of Amazon, with pressure on our advertising budgets, me and my CFO team are seeing increased pressure on our margins. And it's more common that we're running into product lines or entire businesses that are only getting 20% PAG. And this is where you start feeling a little bit of stress, right? It's all right, I've got a little bit of a concern, but this still is probably a viable business. Now it can bleed over into being poor. And again, you see here profit margins of 15%. Friends, if you have products that are only generating 15 points after ads, Amazon fees, and advertising, or if your entire business is in this state, I can tell you that you are feeling stressed out about cash flow, and you are kind of wondering, why the hell did I start this business, right? It's very stressful to be in a lean margin situation because little things like changes in Amazon fees or issues with our suppliers or interest rates on loans, little things can capsize our business if we have such low lean margin. And so going back, by the way, these are the exact same 3 P&Ls here, but I want to show you another lens through which I look at this P&L as the CFO for 9 figures a year in e-commerce sales. And I want to isolate 2 variables, because the question is, okay, I'm happy with my profit margin here, right? This is the sexy one. I've got 25%. I'm pretty happy with that. The question is why? Why am I happy? And here's why. I'm happy not because of Amazon fees. I don't get to control Amazon fees. Those are static. Now, Amazon is going to change those fees occasionally, but at the end of the day, the Amazon fee is the Amazon fee. What I can control is what I source my products at and my strategy for marketing my products. And so I want to introduce you to a new KPI called CAL. It's the load. It's the cost of goods sold plus advertising load. How much do those two variables weigh down my profit and loss statement? If they weigh the profit and loss statement down too much, it's a harm to my business. If I've got a lower CAL, then they're not going to weigh me down. And so again, 25 points in COGS plus 13 points in ads gives me a CAL of 38%. You're going to ask me, Tyler, what is a good CAL? Anything below 40% is elite. This picture on the board right here is the picture of a scalable business model that can handle debt if you needed to raise money to grow. This is a very nice business. Let's take a look at the second P&L, the one that's okay, right? Again, this one we're a little bit stressed. We're looking at our P&L that Nate's team put together or my team put together, and they're good accounting. And we say, dadgummit, I've only got 20% profit margin after my ads and my Amazon fees. Why am I feeling stressed? Well, you would take a look at this and you would say, oh, the combination of my 30% in cost of goods sold plus the 13 points I have in ads is on the verge of being not great. It's okay, but I'm in a bit of a warning level here. And so what I would say is if your CAL is between 40 and 45%, you're okay, but you're not elite. You're probably okay, but you should take a look at your future product launches to make sure they're more profitable. And of course, if you're the guys that are in the red pink here, this is the picture of stress. And so we look at this product line and this is what your CFO says to you. If this is your P&L, the CFO says, hey, you cannot afford 13% in advertising if you have 35% in your cost of goods sold. The combination of those two variables are unsustainable if you want this brand to be scalable. And so if you were to go pull up your profit and loss statement pull it up for a month, pull it up for a year, whatever you want to pull up, if your load from COGS plus ads is more than 45%, you're looking at a product line that is under stress, and you may want to take a look at improving that product line. So let me summarize this one real quick. You're going to take a look at your profit, that's PAG, profit after ads. And first of all, you got to do what Nathan told you. You got to make sure your bookkeeping is adjusted to actually see profit in a way that has some integrity. You're going to take some time to measure that profit by channel. You're going to take some time to measure that profit by SKU. And if you're unhappy with it, like, right, if you look at it and it looks like this last guy here, you're going to take the analysis a step further and you're going to unpack what's called CAL to try to answer the question, what is wrong with this product line? What is wrong with this business? Okay. So those are the first two KPIs. Let me talk to you about a third KPI. And this one comes straight out of game theory. It comes straight out of the theory of constraints, all these great economic models that help us understand how effective we are. You know, if you were to play baseball, your batting average is the expected success rate every time you have an at bat. Well, in e-commerce or being an Amazon seller, that metric is called return on inventory investment. Okay, let's talk about it. We already unpacked this basic P&L down to the profit line, which is called PAG. But now we need to take that profit number and divide it by the cost of goods sold that we burned to produce that profit. And it's going to give us our batting percentage, our batting average. The example on the screen here, we made $250K in profit. This is our gross profit divided by our actual cost of goods sold for that same period of time, leaves us with an 83% return on inventory investment, or 83% ROII. So let me show you a couple of examples here. And by the way, this is a calculator. Actually may have to have you email me if you want a copy of it. I'm happy to share it with you. But the math is not hard. You can do it yourself. If you just take profit, you can do this for a day, you can do it for a month, you can do it for a year, and divide that by the amount of COGS that you used in that same period of time. It's going to give you your ROII. Now, if your picture looks like the one on the screen here, that's really, really good. So this, what you guys might find to be most valuable on this slide is actually the green part over here. What does it look like to have an elite profit engine every time I turn my inventory? Well, that would be having more than 100% return on inventory investment. And then again, if it's kind of like marginal, right? Let's say I'm back kind of like you guys saw on the last slide, where my ROII is only 83%. Yeah, that's okay. But I may look to try to engineer my future products to have a higher return on investment. And, of course, if you're below 65% or below 45%, even worse, guys, we really need to pay attention to this, because you think about this is all about working smarter. If I have to turn my inventory 10 times a year to make a living, boy, that is a really hard, I'm working very hard. And if you listen to my VIP section, I'm gonna walk you through how to increase velocity, because guess what? The velocity balance sheet side of this that Nate talked about is so important. You can't just look at your profit and loss. But damn, if I could choose to just have a better impact per turn, man, I would choose that first. And so the first thing I want you guys to look at is profit. Look at that load of advertising and cost of goods sold, and then take a minute to take a look at your return on inventory investment. If it's below 100%, there may be some work you can do to improve the performance of your brand. And I think, yep, that's all I have here. So I promised you guys a quick teaser on the VIP section here. I'm not going to go into this much here, but just know that if you can take that batting average and compare it to the velocity of your inventory, it gives you an entire new world of metrics to measure each and every ASIN or SKU in your portfolio. And if you're not doing this level of analysis per SKU on at least an annual basis, maybe more often, then you're probably doing it wrong. And Nathan and I have both worked with a lot of the investors that buy Amazon businesses. I currently sit on the board for one of them. And the biggest mistake we made, was not paying attention to the working capital needed in these businesses to make a living. And so don't make that same mistake in your own business. Make sure that you're understanding the return on working capital. If you want to see me walk through a couple of real strong concrete case studies, then feel free to grab the VIP session and I'll do that with you. So that's all I have here. We can pivot to questions.
Great. Thank you very much. And thank you for pitching the VIP video. I will talk about this right now. Hi, Nathan, again. And yes, this is what Tyler is saying, talking about VP video. And to explain more, that in this session, we worked with 40 different Amazon experts, and they all sent us additional extra video, which is not available on our YouTube channel, but it's available in VAP package, which you can upgrade to for a small investment. And there are a lot of different videos, walkthroughs, deep dives, case studies, template shares, and more deeper strategies, additional extra strategies. So Tyler already mentioned what will be in his session, and his session is additional 27 minutes, almost half an hour. It's probably longer than this one, this presentation, which he did. So I hope you will enjoy. And Nathan, can you share a little bit what you sent to us for the VAP session? It was about exits, right?
Yeah, so I went through an exit in 2019, and I learned a lot just going through the process, stuff that I wished I knew it, kind of going through it. So I put everything together, everything I knew, how we set our systems up, our team up, our finances up, really all parts of the business, and what the buyers cared about, what they didn't care about. So I tried to just put that all together for you guys, and I hope you enjoy the session.
Yeah, cool. Thank you very much. And the link you will find below in the description to this package. And enjoy. All right, so let's do now a few questions. I have a question for Nathan. Nathan, what to keep in mind in terms of bookkeeping when preparing for preparing to exit the brand? So you have experience, and any thoughts?
Yeah. So usually companies that are buying companies, or people that are buying companies, that they want 3 to 4 years of financials. And I think a lot of people, and I get this all the time, where they'll try to switch bookkeeping firms mid-year. And we're pretty strict that, hey, we got to make sure the entire year matches. And there's a reason for that. You never know what opportunities are going to come. You don't want half your books done one way, half your books done another way. So that's kind of the key, making sure you're following the e-commerce standards like we talked about, where you're using a connecting tool. You have the top line of your income statement is the actual Amazon sales, not the money deposited in your bank account, that you're using Accrual for sales and COGS at the very least, so you can actually see what you're making each month. All of that combined with just having 3 to 4 years of clean books that are in that same format. That's what people are looking for. And we had an initial call with our buyers before we even got into them making an offer. And we just answered questions about our business. And down the line, when they made an offer, we accepted it. They started due diligence. They opened up our books. Everything that we told them in that initial call matched everything that was in our books, because we knew our numbers inside and out. And I'm sure Tyler's seen this a million times, where it's the opposite. They actually open the books, and it's nothing like they actually mentioned on the initial calls, and that loses a lot of trust with the buyer. So just some things to keep in mind.
Yeah, and actually, I remember one case when one aggregator shared with me about 3 years ago. They bought a brand, and the brand owner showed the numbers like December and January numbers. He swapped somehow in the reports, and the aggregator didn't analyze properly. And they say, "Oh, it's great, it's growing," but actually he swapped, and it was like vice versa. Actually, so yeah, it was interesting to hear that he didn't do like a good analysis. And Tyler, what are the most common cash flow challenges for Amazon sellers? Because I know in our community, some sellers really need cash flow, and yeah.
Yeah, I mean, well, I just want to acknowledge, first of all, that getting cash is harder today than it was 2 years ago. So in any environment where the interest rates are high, I mean, we're seeing a little bit of light at the end of the tunnel where maybe the rates may come down here soon. But to your point, Augustus, it has been very challenging to have the kind of story that a bank will be willing to lend against. And so that creates a huge amount of pain. It creates a lot of stress for sellers who, especially the ones that, if you guys remember kind of the red slide I showed you, where their margins are a little bit lower. And so they've been dependent on maybe an Amazon loan or a less favorable form of debt to fund their inventory. And so that challenge keeps you up at 2:30 in the morning in the fetal position, praying for Amazon to make another payment, right? And so the solution to that is actually a lot of what Nathan and I have been talking about today, which is to just have cleaner, more understandable, easier to make decisions on accounting. And then honestly, just be a little bit more conservative. In a high interest rate market, I may not have enough cash to double my business every year. I may actually have to pull the throttle back a tad to make sure that I stay healthy while I navigate the current interest rate environment.
Yeah, cool. I have a question for Nathan. I remember when you started your EcomBalance company, you talked or you shared in your blog that you interviewed a lot of e-commerce sellers to understand their pain points. Maybe you can share what did you learn, like with the biggest pain points of e-commerce sellers when you were preparing EcomBalance software?
Yeah. So to give a background, anytime we start a company, we try to do a lot of market research, just asking people like what bookkeepers you know in the space, what you like, what you don't like about your bookkeeper. And it was overwhelmingly bookkeepers that were not on time every single month. So like we when we say 15th, we try to stick with the 15th every single month, no questions asked. Communication was a big one. I think a lot of bookkeeping firms are good at the bookkeeping, but they're not great at the stuff around the bookkeeping, the systems, the processes, the hiring, the customer service, stuff like that. And then just the industry standards that we talked about. Bookkeeper, people use their local bookkeeper that has no idea about e-commerce. Like you don't want to be your bookkeeper's first e-commerce client. So that's a handful of them.
Yeah, cool. Unless Tyler wants to add something.
No, I just think it's well said. Yeah, I think if your bookkeeper kind of tensed up when you mentioned the fact that you sell on Amazon, or your CPA was like, "Oh God, Amazon," like you probably want to try to find a team that knows what they're doing, because I literally had a guy yesterday that's an accountant tell me it is not possible to reconcile Amazon settlements. I'm like, "Oh, really? Okay. Well, it's funny. I don't know what Nate and I have been doing for the last few years, but it is possible. It actually is theoretically possible." And so you just want to make sure you have a team that's competent. And by the way, you don't want me filing your taxes. You don't want me handling your VAT if you're in the EU. You don't want Nathan probably doing that either, but you want somebody who's an expert. You know, if you have cancer, you don't want the guy who does your dental work. You want an oncologist. And so I think having someone that understands the kind of problems that you need solved does make a big difference.
Yeah, I'm sorry. It seems my main computer just dropped. It froze.
We have a new guest speaker. We have a new guest in the room today here. Oh wow, it's still Augustus. Hey man, welcome back.
Yeah. So yeah, sorry for that. Something happened to my big computer after running Seller Fest online for the whole week. All right. So I think it's great. Thank you for all your amazing answers. And if somebody wants to reach out to you, can you give us again an overview how you help Amazon sellers?
Yeah, I mean, feel free to check me out, Nathan Hirsch, on any social media channel, nathanhirsch.com. Yeah, EcomBalance, it's a monthly bookkeeping service. We're not a SaaS, even though we have a client portal that you can log into it, stuff like that. And yeah, I have some other companies, TrioSEO, if you're looking for SEO to your website, Shopify store, stuff like that, and Outsource School if you're looking to hire.
Cool. And Tyler?
Yeah, so I mean, selleraccountant.com is a great way to find free resources. Our YouTube channel is very active. Seller Accountants YouTube channel is good. And then likewise, I mean, Nathan and I both have names that thankfully, if you Google them, we're the guys are going to pop up. So, you know, Tyler Jefcoat, if you look for me, you can find me.
Cool. Thank you very much. It was a pleasure to have you here, and goodbye.
Hey guys.
And now I would like to invite you to watch other video where we talk about pricing strategies. There are two different experts sharing how you can price your products and how you can use pricing, different pricing, to change the ranking of your Amazon product. So check this out.